Okay guys, it's Tuesday the 1st of August and I've just entered into a short position on the FTSE 100. I haven't actually posted up a live trade video now for a couple of weeks. So basically 2 weeks ago my sister was flying back to New York. She was over visiting us, so I was not able to trade the day. And then last Tuesday there was simply no setups. There's none that I was prepared to take. So it's been a couple of weeks off. However, I have just entered into this short position. It has set up relatively well on the FTSE 100. We're still pre-market, just looking to come up to the 8 a.m. open. Now, really, we have a little management point down here at around about 7406. But what I'm looking for on this is a move down into this zone down below, around about 7399. There's the potential there. I might actually close partial profits at that level and then look to run. So what I'll probably do is close 75% and then aim to run 25% of the position. If we get down to that, round about probably 7400 rather than 7399. So I'll close out at the round number. And the reason for that is, well, first of all, this is a key resistance level. And we've rejected off of it a number of times. On the daily time frame, the market has been producing lower highs. Now, it doesn't mean that the market is going to break down, but it means that it is worthwhile looking for potentially that slightly larger move. Now, yesterday on the FTSE 100, on the daily time frame, there was what is potentially a continuation spike. So there is still the potential for this market to put in a bullish bounce, certainly up toward the 7430 levels, but it has set up relatively well this morning. We have rejected, we've come up into the zone, we've really tested it a couple of times, and then we have had the pin bar, which is where I entered into the short position. So that's what I'm looking for. What I will do, as always, is however the trade completes, I will take you through the analysis on the higher time frame. And what I'm doing right now basically is just waiting for the 8 a.m. open. Okay guys, we're just at 22.3. What I'm actually going to do is re-record the end of this video. So rather than just showing the standard trade video, there's quite a few different things I can go over on this market today, which I feel will be more useful than just the bog standard trades that I normally record. So first thing is with the sell from this morning at 740. Now the market came down, tested these levels, and then it came back up. The stop level was at here. Now as the market came back up into this stop level for the remaining 25% of that position, what I did was I actually left the fixed stop that I already had on the chart and I used that instead. The rationale was give it a little more wiggle room. I was expecting the market to, or there was the potential there for the market to come up and test the 7426.1 level, which is what I went over with subscribers this morning. I'll take you through that on the daily time frame, the reasoning why in a little bit. However, what the market did was it came up, just kept going, and it took my stop out. Now the trade went from taking an easy exit at this level and making just under, or it would have made just under 1%, to it coming all the way up, and that the remaining 25% running all the way up and leaving me with only around about 0.2 to 0.3%. So basically what I did was, I'm still happy with the way I took the trade. I'm still happy with closing the partial profits and looking for a stronger breakdown. We've been failing up at these levels multiple times. We've also been failing down below, really down toward the 7350 area, I believe. Maybe it's the 7336. I'll check that on the daily time frame. We've been failing at both ends. So there's the potential there for the market to make stronger moves down and strong bounces from the lower levels. However, the market then came up, took me out with that 25%, and basically I fluffed the exit, and it took me down to that 0.2%. Now, it's really easy to get very frustrated when things like that happen, and it's really easy to start making mistakes. However, it's really important that even when you take a trade, let's say, well, I took this trade, once the trade completed, obviously, my thought was, should have exited down at this zone, 7400 level, the round number. We had a couple of confluences down here for the potential bullish bounce. However, I was looking on the higher time frame for the potential stronger move down. Now, when it came up and took me out with the 25%, obviously you're thinking it tries to change in your mind. And instead of the rationale you had for the trade, it starts to take you through all the reasons that you shouldn't have traded in that way. And it's very easy to either allow it to really affect you or even to allow it to start causing you to make mistakes. Now, the market then came up into the top of the zone, pushed up relatively strongly. However, it came up and it's still in this key resistance zone. So all I did was waited for the next setup at 9:20, still fit in with all of the things I was looking for the day. And on top of that, what it had actually done is it had pressed up and tested the level, yesterday's high, which is what I went over with subscribers, that there was the potential there for this market to do. So what it has done is it has taken out one of the things that I was looking for. So if anything, it's given me a little bit of a better entry for the potential sell position. Now, really what I should have done was taken this trade and exited here, and then really in all honesty, I would have just finished for the day. However, if it hadn't worked like that, if it came back up and came into this level, this one would have made more sense for me to try and run the profits longer rather than this one. So all I did was took this as the second entry, and then we got pretty much what I'm talking about when I'm talking about August markets. I went over it in the Sunday review videos. August can be a very, very strange time. You can start to see price action like this, and you can start to see price action like this all day. The market's just going to flatline because traders are on holiday. So I'm in this trade, I'm holding it. All this very, very choppy price action. It's incredibly difficult to read this kind of price action if you just make it a little bit bigger. Basically, we're just ranging sideways. We're failing to break down. We're failing to break up. And then we start to press up once again. Now, the market, when it came up into these levels, it's starting to fail at the 7433 level. Now, watching the 5-minute candles, because I was sitting here at the computer for this, it was actually the 433.3 level that they were fighting over. The market kept trying to hold above that level, and then it kept failing. It kept trying to hold above and failing, hold above and failing. Now, when you're looking at this type of price action, it's easy to just see the 5-minute candles forming. So when this candle was forming, it looked very bullish. When this candle was forming, it looked very bullish. This one, this one, this one. And every time they're forming, your mind is telling you it's going to break. It's going to break up. Get out of your trade. Take a long position. You're in a stupid sell position. You should have got out when it started chopping like this. However, what the market's actually telling you is it's rejecting at those levels. And by watching it, I knew it was the 33.3 level that they were really fighting over. And if it closed above there, I'm more than happy to say it would have then rallied up into the zone up above. It didn't. It kept rejecting. Now, I've already had this trade. Only got a very, very small portion of profit. We've came down after this one. We're chopping sideways here. And then we start to press up once again. Now, as the market came along like this, we got the 1130 candle right here. This is giving you further rejection. And it's suggesting, once again, that the bears are starting to take control. We're starting to look at a double top. Now, I was happy to get into a second position up here because of that. Actually, I should point out, it's very rare that I take a double position, but the way the market was setting up today, I was happy to do it. Now, what's also important is I was in two positions and I was managing both of them differently, which is quite difficult to understand. But this one here, this sell position here, I was really looking for it to come down into these levels. Now, what I mean by coming down to these levels is, when it gets down here, that's when I start to decide what to do with the trade. For this one, I was looking at this management point, all these choppy lows. Two different positions, they're for two different reasons reading the market. I'm using two different management points. Now the market came down and it actually paused here a little bit, struggled just to break through these levels. However, for me, it broke down below this section, which was really the main section, and I was then happy that it was going to come down, and it did come down. So the day went from being frustrated at this, annoyed with myself, to that feeling of frustration. It comes in your head, everybody. It tells you to do the incorrect things. It tells you that you need to try and catch this run up. It tells you that you need to get out of your trades because you've already had a poor trade and you want to just hold on to that profit. It's trying to confuse you, but what you need to do is follow your trading plan. It's really difficult for anyone to consistently predict what the market is going to do. You can read the market, I can read the market, and most times I can have a general idea of what the market is going to do. However, it's very difficult to do that, especially when day trading. So you need your trading plan to protect you. It's what protects you from things like emotional trading. It's what protects you from getting into poor trades. It's what protects, when you're sitting at the computer, all we need to do is hit buy or hit sell to get into a trade. There's no one there restraining you and stopping you. And it's very, very easy to slip into bad trading and rack up losses. If you're going to be a professional trader, you really need to avoid that at all costs. If you have a mistake, let's say once a month, fine. But as long as it's a mistake, as long as it's not a mistake, and then let's say you take a poor trade and it loses, and then you start jumping into, you're trying to catch this run up, then we come down, you try to sell, but it gets really choppy, so you start to buy, then it comes up and you're sure it's going to win, so you start to panic and you exit the trade, and then it comes down. All that happens is you just rack up loss after loss after loss after loss, and then you've got to spend a month, 2 months, 3 months trying desperately to make it back. It's not healthy and it's not the way to trade. So anyway, the market then came down. Now, what I'm going to do is take you through the daily time frame quickly, show you, first of all, why I was happy to look for the move down. Second, why I was expecting, or I said to subscribers, there's potentially this market would come up and at least retest this level. In fact, what I'm actually also going to do is, it's really easy to talk a good game. I did make over 2% today, which was a really good result. So gain today, 2212. Could have been very, very different, but it's the reason it ended up like that. That's, I should point out that that's a very good day for me. I've made 2%. That doesn't happen every day. I'm a trader. I'm a normal trader. I have losses. It was a really good day for me. But the reason I was able to go from having a pretty crappy day, or crappy in the way I look at it, in that I really shouldn't have waited, certainly not for it to come up into the physical stop, but really I should have just taken the full position close down at these levels. I've taken that frustration and I've just pushed it aside and looked at the market and followed my trading plan. It's remained key resistance, even though we've seen this run up. Everything fit for me to take the first sell, it came down. Everything fit for me to then look at the second sell, and the market came down and it worked out very, very well. Now, on the flip side, they both could have stopped me out. And I could have ended up losing around about, 1.8%, maybe 1.7%, depending on what that first position was. I need to look at the P&L. But that's also part of trading. You need to know when to get into the market. You need to be willing to risk your capital when it makes sense, basically. So on the daily time frame, let's quickly have a look at why. Let's just let this load. Oops. Okay, so what we have here is a candle which rallied and then collapsed back down, but still closed with a bullish body. Still closed within the body of this candle. For me, that was a continuation spike. With it being a potential continuation spike, there was the potential for the market to come back up and retest the highs. So that's the first reason why there was the potential there for the move up. Now, the market has also been trending down. High, lower high, failure here, and the market came up here this morning. We've also been holding at support down here. So the potential, well, first of all, is the potential that the market is squeezing, once again, making a price squeeze. However, at present, what I was looking at was, if we're seeing sells from this key zone once again, after the continuation spike, it could be a sign that the continuation spike has completed, but there's no bulls looking to take it further up, and the market can come down very, very strongly. So that's really why I was looking for the potential profit run on that move. You know, I'm happy with the way I looked at it. The only frustration came is because the market moved against me, but that's part of trading, and that's when it becomes important to just follow your trading plan. Okay guys, so a little bit rambling. Hopefully there was some useful stuff in that video. I'm James Orr, and thank you.